right, hello everyone, and welcome to another Pepperstone live event where we're discussing markets and what moves them, and of course some of the hidden kind of secrets of what you may not quite know about market structure. Today we're talking about that topic, and we're going to be breaking down, I guess, everything that you need to know about structure, how you may have been able to potentially use it a little bit over the last couple of weeks, and why we're seeing so many big momentum moves in the markets. My name's Thomas Atkinson. As always, I'm joined by Tyra Nabella. Ty, what a couple of weeks it's been. Actually, pretty much all of 2025. It's been absolutely crazy. And we're getting so much volatility, which is not a bad thing if you're a trader, especially if you're a day trader or a swing trader. Back to technicals, I feel, over the last month.
Absolutely, Tom. Welcome, everybody. Hey, you called it way back in November of last year when we knew that there was going to be a presidential change. You knew that there was going to be a volatile year. There's no question about that. And the markets certainly haven't let us down in that regard. We've seen plenty of volatility. And really, look, as you know, volatility can work for you and against you, but it's really understanding the markets, applying the technicals to suit the situation. And the technicals do still play the game. There's no question about that. Do you want to be doing 3 and 4 month long swing trades? Probably not. But the short scalping trades that give you in and outs with good support and resistance have really held up very well. So it's really good to jump in and see these things play out in the real markets, even though we could probably say it's one of the most unprecedented times ever in the market. I think that the market, it's definitely an unprecedented time.
Yeah, I think that's the thing. It's unprecedented time, but obviously, technical still can kind of cut through some of those things. Obviously, we often say if it's in the press, it's in the price. And I think also the patience and the reaction has been the key to maybe the last month anyway, since we've gone more technical. Hello, Stuart. Hello, everyone in the chat. Say hello as well if you are in there right now. And always ask questions throughout. So we always encourage that. If you're here live, why not ask some questions? We've got Lee, we've got many others coming in. Thank you very much. And ask the questions. We'll answer them throughout as we go through this live analysis. So we'll cover some stock market indices. We'll cover, of course, the two main big kind of gold and silver, commodities. And obviously, we'll look at oil. Along with that, we'll look at some crypto and finish up with some currencies as well. So we've got a lot of things to talk about. Let's begin, though, with silver, because we've discussed this for probably about a month and a half here on the show each week. And if anyone that follows us as well, you guys would know that I'm particularly quite bullish on silver at the moment. It's been a very, very good trade, but it comes a little bit down to structure. So let's have a look here at the previous market action and get a bit of an understanding of why silver has gone so far so quickly. So if you think about it, a lot of it, structure is basically the building of a position and then, of course, a breakout to the next level of equilibrium. Now, in this case, we can see here that silver has had a bit of a problem with 3460. And this is, of course, that classic resistance level. Now, it forms structure before going through this level. And the key here is understanding this zone down here. It's what we call a coiling market. Some people call it, like I do, a pit or pullback in time. Some people even call it a channel pattern. It really doesn't matter what it is. It's effectively an area or a zone where the market said, I'm not sure what I want to do next, but when I break out, it's probably going to be an aggressive one. And when these tend to happen before a key level of resistance and then they break into that resistance tie, it's quite a classic setup, isn't it? That usually they're going to go through that resistance and continue to move up. And that's exactly what happened in silver here. It was a great coil. It was probably about, a month in size, maybe a bit more.
It was, yeah. And look, when the longer the coil, sometimes the bigger the breakout. We've said that quite a bit. And when it is being bolstered, I mean, you can really see it. I mean, and I know people will say, oh, well, that's in hindsight, but it's actually not, because we were talking, if you go back through the webinars, you would have seen that we were talking about it while it was actually happening plenty of times. And you could really see it unfold. And it's been a great break. There's no question about that. It's technically leading gold now. I mean, it's not the gold price pushing it up. I mean, it's actually breaking out in its own right, which is really, really good to see, because we get a kick out of seeing technicals play out, because really, I think it gives people the edge. And we're hoping, obviously, that the people who are joining us, week in, week out, and watching the replays and getting these views are really getting some insight that you can actually predict these moves. And it's really just identifying the key points like we talk about. And that coiling effect is a month in the making. There's no question about that. And it did play out beautifully. We're going to show you a couple of examples tonight of technical analysis playing out perfectly, even though we are again, in a very, very interesting time in market. So this was just a very good example, and I know there were a lot of very happy silver traders, Tom. You can see.
Yeah, there hasn't been many happy silver traders for a long, long time in terms of the longer term guys, but maybe we're back and we're actually about to see silver go into possibly that uncharted territory for the last, was it 12, 13 years, which is the 40s. That would be pretty amazing. Now, with the structure, another thing that you want to think about is when you have these, builds of direction and they break in the overall trend. We spoke about this, I think, in some of our previous sessions, which you can go back and check in the Pepperstone YouTube channel. We talked about weeklies and the fact that if we could follow the trend on these higher timeframes and follow that momentum, that if they break in the direction of a weekly or a monthly momentum, that is the bigger trend, then they're generally stronger. So in this case, of course, it was a classic one for that. And what we ended up getting was a secondary, because of course you might think, oh, well, that's all good. You're doing a daily, who cares? Well, of course, we get a secondary kind of setup here where we get a market that is incredibly bought. Don't get me wrong. A lot of indicators, you're going to put this on. You're going to put an RSI. You're going to put a stochastic. You're going to put a MACD. And of course, what are all of those going to say? They're all going to say overbought. But as we know, markets can remain overbought for a very, very long time, especially when they're in a strong, aggressive momentum trend. So one of the key things to do is sometimes to go down and look at the structure and to understand, again, if the market is breaking in the direction of the prevailing trend and you've seen a pit or a coiling market that is then sat, it's probably reset some of these indicators on the smaller time frames, and it could be getting ready for an aggressive move. So these breakouts off this type of structure actually also tend to be quite aggressive. And we've seen this in a few pairs, as Tyrone alluded to before, that have happened. So first up, silver still looks bullish in my case, Ty. I mean, I don't really see any, maybe a day trader might say, oh, it could get exhausted, but would you really want to short this right now?
Oh, absolutely not. I mean, look, we don't like shorting anything that is actually very strong in terms of a momentum move, but especially when you see a breakout like this is a very, very powerful breakout. There's a very strong chance that it may well come back down and test that 20 moving average and that role reversal zone that was resistance. But even knowing that, I still wouldn't short it because I think you're playing with fire. Would we go long, from that level if it does that? That's a very different trade because then you're trading in the direction of that overall trade. But even though there's a reasonable possibility that it can come back and test that, I still wouldn't even short into it because when something is so strong, it's very likely that it may actually stop before it gets there and reverse. And if you haven't got your stop loss right or it's a little bit bigger, you're going to get hit hard on the aggressive move up. So it's a very dangerous play to short against the trend, especially an aggressive one. So it's always better to look for the opportunities in the prevailing trends direction.
Yeah, absolutely. And especially when the momentum has been on so much in some of these stocks. Let's just quickly jump from silver to gold. A little bit different, but still, again, prevailing trend would dictate here, and we won't spend too much time on gold. It's obviously in an upwards market action, and we're seeing pullback. So higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So theoretically, you're not really going to be looking at too many bearish positions unless you're in the smaller time frames. And if you're thinking about a structure trade, well, what have you got here? You've started to get a coil. You've started to get a pullback in time. And of course, what would you be looking at? Well, if it breaks above this like 3,405, then that is in the prevailing trend we spoke about. So probably going to be more, strong or stronger than the negative side, even though at the moment you might be saying, well, it looks pretty bearish on those small timeframes. I think this is that key to go patience, react, don't necessarily predict. I mean, we know that we're more bullish. And I think as a beginner trader into an intermediate and even pro, what you always want to think about is, do we have bigger money flow? And by sticking to those higher trend times and more importantly, sticking to the breaks that are more in that in that movement, as long as you can see, greens or blue skies above. I always call it green because I like to think of green as the color of the money. That's what MT4 and MT5 always have. They always have green for the green, as you can see here on the right hand side. So yeah, basically we'd be looking at a more of a break towards the upside. So for now, gold, I think it's mostly pretty clear here, Ty. A series of higher highs and higher lows. Nothing much else to note, I assume, from you. What do you think about the S&P though?
Yeah, the S&P. Actually, could we just go to the S&P? Could we go to the Russell first, actually?
Actually, yeah, absolutely.
Is,
With the
is that
Russell.
okay? I just want to
What
point out
time frame would
something.
you like?
I'd like the daily actually, and
Yep,
the
got daily.
reason for that is if we can just zoom it out just a little bit. I want to show this 2100 level as if we can just pop a line at the 2100 level. I want to show how
Mm-hmm.
easy it can be to just trade technicals in even in a market that is a little bit uncertain. You can see that it effectively played out beautifully where it was making a series of higher highs above the moving averages. It went up and hit the 2180. We know the 2180 is a very, very powerful resistance level. You can see right to the left of the chart how many times it actually touched there. We get a shooting star and it pulls back all the way to the 2100 where it actually broke through the resistance in the first place and back to the 20 moving average. Like that is classic trading. There's about 5 different trades there that you could have actually taken that are very, very technically sound. And picked up 1.5% to 2% each time it did it. So I still really believe that the Russell at the moment is a bit of a leading indicator for the S&P 500, and the fact that it's actually sitting at a level of support, it's a little bit scary to be thinking we should be trading the S&P 500 in a minute. We'll look at that to greater highs, but the trading opportunity might still well be with the Russell 2000, because if we do see a breakout on the NAS and the S&P 500, this one's still got a long way to go to actually even get close to where they've been in recent time for like trading. So this is at a very strong support level now. There's no question about that. But one thing I would even if you're not going to trade the Russell 2000, be very, very conscious of this level, because if this level happens to break down and actually start trading below this on a daily chart, it might see a significant pullback in the S&P 500 and the Nasdaq. So this is whether you choose to trade this one or not, just keep an eye on it, because this is an extraordinarily important level and very, very technically sound. And I believe it's still a little bit of a leading indicator to what's happening in the other two big indices.
Yes, I think the thing is as well, it's about yield. So how are we going to get to higher market participation? Let's have a look here at the US 500 to break that down, because it's pretty much one of those classic structure plays. You'll have to ignore these options high low levels. We'll just get rid of those that haven't reset to the current prices today. But you can see here that we have a market that's obviously getting very close to all-time highs. And from a structure perspective, what have we got? We've got a bit of a pullback in time. The market is starting to chop up here as geopolitical tensions and obviously everything, tariffs and all sorts of things, take hold a little bit. And we've got a market that is bouncing off that all-important 20 moving average. So we've seen a bounce down there, bounce here, and each time it's been making a series of higher highs and higher lows. But I think if you were arguing, you would always say that generally the weekly at the moment and the daily are pretty much presenting more of a bullish market idea than bearish. However, is it clear that it wants to break to the upside just yet? Maybe not. Maybe the trade is actually to be patient. And something I've mentioned a little bit in the last couple of days, Ty, is that I'm pretty neutral on this position. So although the daily has hit the 20 and obviously seen a bounce, and that was probably the initial reaction you would expect, it did fail to make a higher high, and it is now sitting underneath it. So in this case, what I would do is I would go to smaller time frame, like a 2 hour, and you can see here it's all over the place. And when you look at the daily, you're always going to be able to spot what the smaller structure looks like. And you can kind of see here it's up, down, all around. We've got a clear support at around 5,900 to 5,925. We've got a clear resistance at 60.50. And this just also happens to be a bunch of options. Now, we're not going into options too much today, but market structure in the stock market can sometimes be dictated to by these options levels, what we call call walls and put walls. And that ends up reflecting in price action. And it also reflects in market structure creation. So why are we trapped within these two zones? Because we have a ton of options at the top, we have a ton of options down the bottom, and no one's quite clear yet which direction it wants to go in. And this is another classic case of why we use today's topic as structure, because it's actually trapped, even though it's in an upward trend. It doesn't know.
Yep. Absolutely. And you don't have to be an options trader to benefit from understanding where put walls and call walls are, because
Correct.
they do options are one of the heaviest traded vehicles in the world now. They're very, very popular. So understanding where the walls are can help your normal trading. You can trade CFDs and you can trade just your normal futures exactly the same way. But understanding where those walls are is a little bit like a secret support and resistance zone that you may not otherwise see because the market structure doesn't necessarily get there. but you know that they are there, and I think they're important zones to understand. It's almost like it can be a little bit like an invisible support or resistance line, Tom, if you're not aware of that level. So it doesn't hurt to actually understand where they are. You don't have to trade them, but understanding where they are is very, very important.
Exactly. And I just think it's a beautiful thing, Ty, that price action actually already sets to these as well. So it's just that further confluence that you're just like, okay, now I even get it even more. I understand why these levels are being created as well. So this is a classic, one of those, pullbacks in time, or is it going to be bearish? Is it going to be bullish? Of course, you'd always be on the optimistic side, because the breakout to the upside, I would say, is actually the pain trade, because I think a lot of people will try to short around here. I don't know it's going to break to the upside. I'm not certainly. I actually, if I had to guess, would think we're probably due a pullback. But again, that's a guess. That's a prediction that doesn't have any basis on the market telling us anything right now. And I've learned over the years, and I'm sure a lot of you actually will ask the chat right now, has anyone there had a gut feeling and they've gone, I think it's going to do this, and then they go and they say, yeah, and then of course it doesn't work out. Has anyone ever had that? Of course, I'm going to put my hand up. Ty's, I'm sure, I had that one a few times.
Absolutely.
Gut feeling, the worst thing that can happen for you is when it works and you go, I knew it. Oh, no, that's bad. That's like a bad positive bias. But in this case, of course, a lot of people coming in with, yes, that's happened to me. But in this case, you've always got to say, well, the overall trend right now is bullish. If it breaks the upside, I'd say there's actually even more aggression towards the upside. But that being said, we just don't know direction yet. So I think it's a great case scenario. And as Ty said before, maybe it's going to take the Russell to really push us through, or at least something to do with yields, which is going to push the Russell. I think semis as well, semiconductors are going to be key. Let's move then from the US 500, Ty, over to the hotly contested subject right now, which is obviously oil. And this one is, not going up for good reasons, of course. But it is the classic kind of thing that does tend to get these big spikes on it. I think last week we spoke about this from a technical, and what that was about 2 weeks ago, oil actually turned technically bullish, and in this area down here, and it was again another level of market structure before a high that broke to the upside. So I did say that there was going to be another one similar to that silver trade before. And when it did break to the upside, it kind of suggested that the market wanted to go bullish anyway. We didn't know why, and we just thought it was just a pullback, movement up to 71, 72 a barrel, something like that. But obviously, we now know what's occurred, and that spiked oil. Now, for me anyway, Ty, I would probably, personally, I would stay away from oil. Classic, that if you want to go with history, what usually happens is escalations obviously happen, geopolitical tensions. We see a spike in oil that gets, wild, which is what happened. We then see a decline. And if escalations continue, which they are, unfortunately, then we see it spike back up to sometimes even a new high. It's pretty much doing that at the moment. But I think this is just, I would be freaked out if I had a big position in this type of thing, personally. Absolutely. Because, of course, at any point in time, I don't even know. I actually don't even know what's going on right now, but I'm sure nothing good.
The target was 72 anyway. So really, for all of you people who follow our streams generally, we were aiming for the 72 after that move up, and that was well and truly hit. And it was a really good trade, a beautiful trade, actually. It doesn't sound like Donald Trump. We're using it. We were beautiful trades. And it was a beautiful trade. But after that, I think it's precarious at best. If you're going to look, we've got absolutely no idea whether this is going to go. It could go to 82 just as easily as it could go to 62, and it could do it very, very quickly. So the best course of action for oil is just to sort of watch and let it play out, unfortunately. And it is unfortunate that what is causing it to move is a very unfortunate situation as well. But but still we trade what we see. But what we see here is extreme risk in any direction. So you don't want to be giving back your hard-earned profits that you made, from the breakout of that zone up to 72. That was a great trade.
Yeah, it was. And look, you can also see here, if you use like a range profile, you're going to get a lot of trade between the 70 and 73-ish a barrel, and that's why we were targeting that zone. Yeah, I just saw Craig mentions before. He goes, "It's the big, beautiful trade." Obviously, making mention of that big, beautiful bill that's I have no idea where that's at the moment either. That seems to change every 2 seconds from the day to the day. But yeah, okay, great. Pretty funny there. So let's move over to the crypto markets. I mean, I just think oil is super dangerous. It's not for me in risk wise.
There are a lot better trades than oil at the moment.
Now, this is an interesting one. So I'll just reset this to, about those levels. So this level here is around the most traded zone. And what you can see here is another structural movement. So this has actually got incredibly two cases to it, as per usual when you get these pullbacks in time. Is the trend moving up? Yes, it would be on the daily and the weekly. No, on the monthly, it'd be definitely down. You've got like two of those three. And you have a market that is broken up once, twice, three times. Now, this is a classic Wyckoff. I get Wyckoff again today, Ty. So what that means is this could be a UTAD, and this could be a UT, and this could be a buyer's climax. So basically, Wyckoff is kind of like a structural-based trade. And it basically says that there are powerful forces at work, large transactions come through, and that sometimes you see the footprints in the market, and Wyckoff likened it to high volume, et cetera, et cetera. Now, we don't actually know which way this is going to move yet. A lot of people are speculating, of course, down based on this big rejection here and this false high at this stage. I'm not so convinced of that. What I can tell you guys is there are tons of trades here, and I mean tons. Like, I've seen so many what we call dark pool trades on these new exchange traded funds. And basically, these are just massive. Like, the sizes we've never seen so far for Ethereum and 2 times levered funds. So, yeah, it's going to be an interesting one. A break above 2,700, at least for me, is the beginning of a rally. And a break below this 2,400, if it holds, is to me kind of a very bad sign, because that would confirm a Wyckoff distribution. Do you have any other thoughts on this? It's really stuck in the zone.
It absolutely is. And really, where we've got that most traded zone, you can see, I mean, if you count, I'm not going to count those candles, but I'll tell you what, over that period between, May and where we are now, there are at least 10 or 15 touches of that zone in some capacity on this time frame. That tells you all you really need to know about how important that zone is. So you're right. I think a break lower than that, could see a reasonable pullback on this one, and the Wyckoff obviously playing out. I'd be watching very carefully. If we do get that 2,700 break of a daily, that could be important. But for mine, the 200 is doing its job right now.
So you're saying the 200 finding that dynamic resistance here, which is the green line. Yeah. Okay. Well, very pivotal point here for Ethereum. And as most of you guys in the room would know, it sometimes comes to the big one, the Bitcoin, to actually show the way. And again, Bitcoin trading around that most traded zone, showing some signs of life the other day in terms of some strength. Technically is a lower high, so that's a high, and this is a lower high at this stage. So if we, of course, get the breakdown, I would say Ethereum would be breaking down as well, and that would be kind of a sign of a change of trend towards the downside. But for now, it's still technically long. So very interesting point here. And I think the crypto markets, I wouldn't be surprised, maybe even today. Remember, guys, news-wise, at the time of this recording, maybe even the time of you watching obviously the live stream, maybe the recording as well, we're about to probably see the Fed chairman come out, and obviously Jerome Powell will have something to say, I'm sure. And then on top of that, we've got the interest rate decision. Not expected to do anything, but in September, the latest data I got today was a 75% chance of a cut. So the market's going to be looking for that cut. And I don't know if he's going to mention it or what he'll say, but I think the market wants some Jerome Powell today. What do you think, Ty?
I think that the market certainly wants it. And I think Jerome Powell will do whatever he can do to upset the president. So
you're saying it's Jerome versus Trump.
I'm pretty sure he does it on purpose. I think he loves it, actually.
Well, I think Trump wants to cut 6 times if he could. So I don't know what's going to happen in the future. That's for sure. All right, next one. We'll obviously cover some crypto here. Now, we do need to cover some currency. So let's have a look at currency dollar index. Now, this has got, let's look at the weekly here. And we had those last bulls kind of sitting here. They got taken out, okay? So they got a new close low. Wasn't at a low in terms of the close, but still pretty significant. Now, we've mentioned before on the show that this opens up 95, 50, 96. But like always, there's always a good reason that markets will take a low, then they'll come out, wipe people out, and then come back down. So I can see why it's trying to get bullish. But Ty, do you still have a negative kind of feel here on the market? I mean, is this actually telling you to buy it? What do you think?
It's not telling me to buy it yet, but it's trying so hard to get above that level. On a daily, yeah, I mean on a weekly it looks quite
daily.
dire, but on a daily, we've got a very significant amount of MACD divergence, which is not a surprise given that it's been hovering in this area for a bit of time now. It's still a lower high, lower low sequence. There's no question about that. Like we're still getting lower high, lower lows, and it is attempting to get up again. But for mine, I think I actually want to see a higher high, higher low on a daily before I'll be convinced. And I think if it does that, we might see a resurgence back up to 101.80 in the first instance and maybe take out that recent high. It needs to do exactly what you've drawn there for mine. And its first mission is to get above that 20 moving average. And then, give us that higher high. I'd prefer that lightning bolt actually found support on the moving average. So exactly how you've drawn it, actually. I'd like it to break past the 20 moving average, pull back to the 20 moving average from above, and then kick up and make a new high. If it does that, I think that's a very bullish sign for it, and that could really open it up at least to the first high at around 101.80 at that point, and then potential moves, all the way back up to 104. The MACD is significant for mine. I think it's important for the dollar index. It's trying very, very hard to maintain this level, but by golly, like we've said a few times, if it breaks below the 98, it's probably a 300 drop from there to about probably 96 to 95.50.
So, of course, whenever you're looking at the dollar index, Ty and I always obviously look at the euro as well. And so far, it's been, generally speaking, euro strength, of course, in recent times. We have talked about that quite a lot. We've liked some of the setups, particularly like this Tuesday, Wednesday session that I think we mentioned over here in May. It was pretty nice. And there's a couple of other good longs in there. Again, bias would have to be more towards the longs just because that's the current trend. But, of course, if that reverses with that lightning bolt towards the downside, which would be the dollar switch, then we'll look at that one. I think at the moment a lot of market movement. The keys here is just going to be, keep watching the structure, keep looking at the levels. There are cases to be made for the euro showing this resistance. You can see here this previous level of supply is starting to kind of show signs of weakness. But if the market sits around here and then ends up closing above that, and the dollar ends up taking that low, I would think that we've got smooth sailing to 118, which would be about a 90, 95, 50, 96. So nothing's for certain, but at least technically that would mean the next level of equilibrium is coming. So some really interesting zones, a lot of potential breakouts of structure. We had Ethereum, we had obviously even gold is forming something right now. And of course, we've got the S&P 500 at a neutral position. So what's up next? Well, I think we'll find out relatively soon, and hopefully you've learned something today. So guys, that brings us to the end of today's session. I guess we've covered those topics. As always, if you have other topics you want to get covered or you have questions, please bring them in. We do have one question here coming in saying the 4 hour following a trend line. So we'll go to the 4 hour. Actually, this is for the euro. We'll have a quick look at that. So the trend line, I'm assuming you're saying, is this bottom one, which is through here. Are we following that? I guess so. It's not broken. It's valid levels, and I guess you don't know. You'd have to come down a little bit further though. So I'd probably say it needs like that. And if that happens, then it could be a very decent pull up.
Are you talking about the US? I was talking about the US dollar, but yeah, Craig, it's the same thing, really, just in reverse. I know what you're saying.
Would be the same.
Absolutely the same thing in reverse, in inverse. So yeah, no, agreed. And if it does break that line on the dollar index as well, it could see a significant shift down. So certainly one.
And that would be that lightning bolt. Yeah,
absolutely, it would. Yep.
All right, guys. Perfect. Well, thank you so much for joining us here at Pepperstone. Make sure to subscribe in the linked comments down below if you do enjoy these things, and also make sure to follow the description as well, so that you can join us live and ask the questions and everything else. So sign up, get involved. There's a lot to learn here in 2025, and we'll be sharing a whole bunch of stuff and also going through this live analysis. So obviously breaking down these things, and hopefully you enjoyed it today. Thank you so much, everybody, from everyone here at Pepperstone. We'll see you next time and have a great day. Bye for now.
Thanks very much, everyone. Bye.